Hey, welcome everyone. I'm Ted Earhart. Just want to spend a couple minutes today talking about one key highlight from Warren Buffett's annual letter to shareholders this year, and then we'll finish up with just kind of some fun facts about Berkshire Hathaway and its stock price in particular that I think you'll find rather amazing. So, Warren Buffett's annual letter came out at the end of February. It always comes out on the last Saturday. I think it's about 8 o'clock Central and 8 a.m. Central, that is. So I'm always sitting there waiting with my cup of coffee to see what the so-called Oracle of Omaha has to say. Buffett's letter is generally considered mandatory reading for investors because he usually provides 10 to 20 pages worth of really insightful commentary about Berkshire Hathaway, his company, and he usually weaves in all kinds of just really thoughtful wisdom around investing and business more generally. So the one, I think, probably the most newsworthy item that came out of the annual letter this year was the fact that Berkshire bought back a record amount of its own stock last year. In fact, it was almost $25 billion worth, which is, I think, around 5% of the outstanding stock is what they ultimately bought back. Buffett he's written about stock buybacks for years, and he's been quite consistent in saying that, stock buybacks can be a very smart thing for management to do if done so in an intelligent way. He's also written that buybacks can be basically idiotic if done in a stupid way. And what this all comes down to is sometimes, your own company stock is selling for a bargain price. And management should be able to recognize when that is occurring and take advantage of that. I mean, if people in the open market are willing to sell stock for way less than it should be worth, conservatively appraised, that can be a very wise use of investor dollars. So one thing I'll just point out is Warren long has said that book value was a fair metric to kind of track the increasing value of Berkshire Hathaway over time. In recent years, he said it's become less of it hasn't been as good of a metric just because of the changing nature of Berkshire Hathaway's balance sheet, but that's a little bit beyond the scope of our discussion here. I just want to point this out because I think it kind of illustrates why they were so aggressive last year. So in the last 10 years or so, Berkshire had a written policy actually, where they would buy back the company stock if it ever traded down below 1.1 book value. Then they changed it as 1.2 book value. And that's what I'm graphing on the bottom here. This is Berkshire Hathaway's price relative to book value. And what I just want to point out, in 2020 last year, the company stock, like many companies, took a hit early in the year due to COVID, obviously. And for much of the year, it was trading well below 1.2 times book. And it wasn't long ago where Warren said that was an obvious time when Berkshire would be selling at a discount relative to what its real worth is. And, he certainly came through to that, on that, and put a record amount of money buying back the company stock. And so far, it looks to be a very prudent move because we've seen Berkshire's share price really jump up so far in 2021. The last thing, this is just a little bit for fun. I just want to mention some fun facts around Berkshire Hathaway stock price, because I think there's probably a lot of people that wonder, why is Warren Buffett, such a big deal? Why is he such a revered investor? And there's all kinds of reasons, but if you want to illustrate this, it can be done so easily through just looking at what's happened to the company's stock over the decades. So this is just some fun trivia for you. Think about this. Well, let's talk about the Dow Jones Industrial Average, first of all, which is hanging around a level of about 33,000. Go back a little less than 40 years in 1982. It's kind of amazing to think about this, but the Dow was at 1,000. I always like telling clients that because it's when many of them were early in their working careers, and it really kind of provides some context around why you invest in the stock market. There's been a 33-fold change in the Dow plus dividends. But Berkshire Hathaway, just kind of coincidentally, the timing isn't perfect, but in 1983, Berkshire Hathaway stock price reached $1,000 per share for the first time on the A shares. But last week, Berkshire, the Class A shares surpassed $400,000 per share on an intraday basis for the first time in history. So my point is, look at how that compares against the Dow. They were both at a level of about 1,000 in the early 1980s. The Dow, not too shabby, 33 times your money over roughly 40 years. But here's Berkshire Hathaway. You've made almost 400 times your money had you bought Berkshire stock in the early 1980s. It's pretty remarkable. And this is why Warren Buffett is, again, such an admired and well-respected investor. He really has an investment record that goes unmatched. So that's a little bit about Berkshire and Buffett's comments in the annual letter this year. Appreciate you tuning in as usual. If you like the video, please give me a thumbs up or drop me a comment. Always appreciate you tuning in. Thanks for watching.